Oh, we are live.
Yeah.
Okay. Good afternoon, everybody. It is a pleasure to have all of you on last month of the year, full of turbulence, full of anxiety. But nonetheless, the webinar gives us an opportunity of interacting with more people seamlessly and talking about new ideas. All of us may not, it might not be as easy as getting together as possible, as is possible through a webinar. Investments are the need of the hour, and the entire discussion we're going to find out how does India break the jinx of low investments and catalyze investment flows to a higher level, because India's needs are huge. The ADB believes that by 2030, we need $5 trillion. Where does that money come from? So all of you are going to be people who are going to talk about what is India planning, how do we do it, what must be done, what we are already doing. And let me begin by introducing Dr. Vanitha Rane, who's the head of the Department of Media and Management from SIES. Let her introduce the panelists, and then we begin. Vanitha.
Thank you, sir. To begin with, first of all, happy sunny afternoon to all the attendees out here. Myself, Dr. Vanitha, on behalf of SIES College of Arts, Science and Commerce, I would like to welcome everyone. And in this 8 episodic series where we are always having a panel discussion, today I would like to introduce you to our esteemed panelists. To begin with, Ms. Sai Sudha. Ms. Sai Sudha has rich experience ranging from operations, strategy, investments, and marketing, from startups to national level organizations. Ma'am has worked in healthcare startup in USA from 2010 to 2012, following which she has worked and lived in Hong Kong for 7 long years, where she has co-founded 3 startups across various fields. She has returned to India. She has returned to India last year and joined Invest India, where she's serving as a senior AVP. Invest India is the National Investment Promotion and Facilitation Agency. She heads all the FDI investments under the Make in India program for the cluster of countries in the APC region. In continuation, we have another panelist, Vivek Sonny Abraham, sir, who is the Vice President, Invest India. He co-heads the Global Investor Outreach at Invest India, along with the other organizational initiatives. He also works with the Kerala and Gujarat state government. And at the same time, to our utmost surprise, he helps these state governments to help bring in more investments in these states. Vivek sir has also been a career investment banker, and before joining Invest India, he headed the European sales desk in London for SBI Capital Markets. Sir has begun his career as a fixed income trader with Lehman Brothers at London. He's also a computer engineer with an MBA from IIM Bangalore. Welcome, sir. And we welcome back Madan Sabnavis, sir. We all remember our esteemed panelist who had already joined us in the agricultural series. Sir is the chief economist with CARE Ratings. Before that, he was serving as a chief economist at NCDEX. He is a well-known columnist writing on economic affairs. Sir has just launched his book named Hits and Misses. The book is actually divided into 2 parts. The first one, which analyzes the banking trends post-reforms, which are based on Narasimha Committee report. The second part is on various controversies, not only controversies like the tenure of RBI governors, tenure of private bank CEOs, remuneration of bankers, safety deposits, weakness of small saving arguments, and limited gains from PSB mergers, NPA issue, IBC, transfer of RBI reserves, etc. The list is never ending. We welcome you, sir. And we definitely hope that you being the columnist will definitely have more number of readers and viewers who are going to get good info from the same. Thank you once again.
Thank you very much.
Bhaskar, sir.
Thank you very much. I don't want to come in the way in the audience and our wonderful panelists. Could I begin with the lady in the panel, Sai Sudha? Each panelist is going to give his or her opening remarks, after which I interact with them, and then we'll throw the question answer session open to the audience.
Good afternoon, Bhaskar. Thank you very much for giving us the opportunity. Thanks to you and to SIES College and the Free Press Journal. So, it is a very interesting topic, how to galvanize investments and how to assess where we are today, and to when we say we, India as a country. So I'm very, very glad to get this opportunity because, at Invest India, we have a lot of things that we see firsthand that the government of India is trying to do to, make the situation better every single day. So I also feel this is an opportunity and a platform, not only for us to give the information, but more importantly, a platform for the domestic audiences, the young people out there, as well as the global audiences, to see this for posterity as well. So it's a great opportunity for us to place on record some of the good work that the government is doing, the central ministries as well as the state governments. I'm sure Vivek will agree. So it's a great opportunity for the two of us. So before I start, I wanted to give you a little bit brief about what Invest India is and what we do. Invest India is the National Investment Promotion and the Facilitation Agency, set up under DPIIT, which is under the Ministry of Commerce. We are set up as a not-for-profit organization under the Ministry of Commerce. Our whole mandate, why we were set up, is initially it was to execute the Make in India program. But today we have grown to be the first point of reference. We act as the, that's our goal. We are trying every day to act as the first point of reference for the investors. Slowly we are not only for the foreign investors, slowly for the domestic investors as well. Sometimes we have investors that come in who have done their homework, A to Z. They've done their entire homework. They exactly know what is the land price, what state they want, what is the sector, what are all the subsidies. They've done their entire research. They've hired 3 auditors, incorporation, everything. They've done their work well. On the other hand, so they would be, investments worth 2 million, 3 million, 5 million. On the other hand, you will have large investors who know, hey, India is a good market. I know that should be my next place, but I don't know about India. Help me with it. Something as vague as it, and their investments would be anything to the tune of 300, 400, 500 million to $1 billion, or much, much more than that. So we handle clients straight up from 500,000, 1 million to a few $1 billion single client. So we handle all ticket sizes as well, and we treat all of them equally. So the kind of investors that come are like extremely thorough, and they just know the management knows India as the next place. Hey, help me with it. So our job here is to handhold them and sort of help them in every stage of their decision making, to setting up their manufacturing unit here up to the point of aftercare. So we do have a lot of clients that we, that come to us. They have been in India far before Invest India came into existence. So they've been here. They are looking at their 3rd plant, 4th plant, 5th plant, but they need to diversify their risk, say probably from one state. So they come to us, and they are. So, the gestation and the age of the company is also completely diverse. So our job is up to aftercare resolution. If they have any issues, any policy clarification they want, location help with identifying their location based on their business model. So we sit with them, understand their business, figure out what would be a suitable location for them based on whatever their requirement. They are catering to the domestic market, or for the export-oriented market, or they want to set up near a coastal area, or they're looking at a state that high in GVA. So we sit with each of the companies, we understand, analyze. So we work with our team of sector experts, state expert, as well as the country expert. We have in these 3 segments a bunch of experts at Invest India. So we work with them. So that's the introduction about Invest India and what we do. Everything we do is under the guidance of DPIIT. We work very closely with the ministry as the parent department that we report into. Apart from this, Invest India also has the privilege of working very closely with almost all of the sectoral departments and ministries within the government of India. For example, there is organization from Australia, say in the energy mines, let's say energy. So, and they are looking at Gujarat. So what we do is, so we have a set of a team that works very closely with the MNRE ministry here, and and then we have a team that's working very closely with the Australian counterparts. That will be the country expert, and like in the introduction, we know Vivek is heading investments for the state of Gujarat. So we quickly make the permutation and combination. We form a group of team of experts, and we kind of work with every client. So regardless of the sector and the state they want to go or the country they are from. So this is how we work, investing. This is how we are designed to work. And so far it's been, if I may say so, like it's been going really well for us, and more importantly, the investors, I hope. So that's the introduction about Invest India. So some of a very few things that I've noticed, and I would like to place on record and mention the good work that we have been doing is, today the government of India works very, especially from the industry point of view, boosting investments, industry point of view, very, very differently what it was many years ago. So I'd give you an example. So we all know FDI is really important for capital creation that leads to employment. In the end, it all adds up to the big ocean GDP. So it all the tributaries go into that particular segment. So, but if you look at it, India about 15-20 years ago, or even much earlier than that, India was always looked at as a very great English-speaking country, low-cost labor advantage country. So that's how we've always been looked at. But today, in an effort to increase the manufacturing in India, it's very important for us to get deeper in the value chain in every segment. So if you take a manufacturing value chain, so there are about 7 or 8 steps. So right from your R&D to design, to the manufacturing, to component manufacturing, to assembly, to testing, to packaging, and then goes to your sales and marketing. So earlier we were very great only with sales and marketing about 15-20 years ago. But today we are very proud to see the development firsthand, the deepening of the value chain in every single pillar. We are talking to the Apples, to Ubers, to Googles, to Intels, to all of them. All of them are talking to us. We are working with every single company to start right straight up from their R&D. Several of the companies outside of their home turf are setting up their second facility ever in India today. So Hyderabad and Bangalore are emerging as a very key R&D capital of India. So that says a lot. So this is not a fourth R&D center they're opening. This is their second R&D center outside of their home country. This is their first R&D center globally. So that's how we are growing. So straight up in every pillar, there is a lot of development, and this would not be possible without all the sectoral initiatives, reforms, subsidies, incentives that the government is sort of putting together. So I'll tell you, say probably in the last 12 months, some of the reforms that landmark reforms that we have been able to make and bring to the forefront and take it to the investors, and we've been receiving great response. The first biggest reform is the corporate tax reduction. So I always think we don't talk about it enough at all. It's really important that we take this message and talk about it. All of us talk about it at every opportunity we get to the global audiences. Today we are the lowest, one of the lowest And we should very proudly say we are the lowest in comparison to rest of the ASEAN nations. So today we are not, competing. We are competing very closely with each of the other countries, competitive countries as well. And there we stand today lowest. I think India is 15, and Singapore stands at 17, Thailand 20, Vietnam 20, Malaysia 24, Indonesia 25%. We are the lowest, even when you're comparing us to one of the lowest compared to the African nations or Mexico. So that is certainly a landmark reform that we have done, and I would really urge all of us here, all the audiences who are listening, also to take home this message and talk about it as well. So that is number one. And the other, as recent as 4 months, 5 months ago, in June, we had set up something called the Empowered Group of Secretaries. So, the Cabinet Secretariat approved it. So this is a group of, the key secretaries coming together who work to identify the bottlenecks in some of the large investments and investors are facing in India. They are designed to help speed track some of the bottlenecks that they are having. So speedy execution, that's where they are set up. And this other thing is called the PDC, another group that has been formed. It's called the Project Development Cell, where that committee's sole goal is to identify investable project and develop the investable project and take it to the market. So almost on a weekly basis, Invest India works with all of the clients, brings to the table all the key clients, investors, identify what their issues are. We take it, our job is to take it to the Empowered Group of Secretaries and the Project Development Committee to ensure everything is moving fast, because we strongly believe the biggest ambassadors of India today are the people who have already invested in India. So you and I can go and talk to them 10 times, but if someone who's already here from their country talks to them once, 3 people will come. So
Okay, so that can I come back to this again later? I'll take up Vivek now.
Yes.
Vivek, your turn.
Thank you, Bhaskar. So thank you, Sudha. You've done a lot of my job for me, so I won't cover the same ground again. But I would like to talk about 5 key insights that we've sort of understood from talking to our investors, working with our investors. The first of which is India has and is continuing to remain one of the top recipients of FDI for a while now. And this is quite a big achievement for us, because if I take a step back, maybe 7, 8 years ago when I was a banker, when I talked about India to my clients in Europe or America, I would only hear slamming phones. Nobody wanted to touch an India transaction. When it was 2015, 2016, you sort of see the optimism come in, and you started companies considering India as one of their locations to do investment as in comparison with Vietnam or Bangladesh or other locations that we're competing with today. But today, actually, the flavor has changed quite differently, and it's a very important thing to realize and market. Companies are now coming to us and saying, we are convinced that we want to be present in India, but we're not very clear what we want to do in India. It's very different from the fact that they're shopping around for locations. They were shopping around for locations. Now they know India has to be one of their locations, but what they want to do is something that they're not clear and they're working out. And this has been happening repeatedly with many companies through the COVID lockdown period. The second aspect, and I won't dwell too much on it because I'm sure Madan will cover it in his remarks, is that companies have been reporting that they have come back to pre-COVID levels. Now, again, this is something that's very important for us to understand, because this has been almost a unprecedented, comprehensive economic depression that we've had. I mean, no other depression in the world has had such a global pan-sectoral effect as COVID has had. And the fact that companies have started reporting pre-COVID levels is something that is very significant for us. A lot of our investors have taken note of that and they are acting on that. The third aspect is that we are seeing technology and health will remain important sectors of operation for a long time to come. And these are not just sectors of operation, but also themes cutting across different industries. So if you are a IT company, or if you're a tourism company, or if you're any other company that's looking at either a technology perspective or a health perspective, then you will do well. And companies are reporting that they are doing well in those segments, and they're reorganizing, rebuilding their supply chains, their internal organization structures to capture that. Now, the important thing for India is that India is strong on both technology and health, on all parts of the value chain, from talent to delivery. And the clear message that we are giving out to our clients is that if you want to do well going forward, I mean, period, if you want to do well going forward, you need to have India in your plans, because there is no other country that can give you both technology and health as a strong advantage in your operations. The fourth aspect, it's a bit depressing for me, and I'm sure for the rest of the audience on this webinar, is that for all practical purposes, even the UK has announced that they're going to start jabbing people. Russia is probably very close to that. COVID is here to stay. COVID will, as far as all research has been pointing us, COVID will become a seasonal flu. There will be, a cycle of COVID every year. There will be deaths and other illnesses around it. But even if, let's suppose that even if we are able to overcome that by a mass immunization program, more and more pathogens are expected to enter the human ecosystem. In fact, Asia is expected to experience the most severe socioeconomic impacts of climate change. We're going to have several more heat waves or cold waves or unusual weather patterns. And this, as we all know, has been the source of this particular pathogen that we are battling now. Now, what this means is that we have to accept that this is a new normal. We have to accept that work from home is going to be part of our life from now on. We have to accept that there will be lockdowns, and we have to work around those. Manufacturing patterns have to change, supply chains have to reorient. Two things have emerged from this. One is new opportunities have come up for India. One very good anecdote is that we were not, we never manufactured a single PPE kit before COVID. And now we're the second largest manufacturer. The other opportunity that is coming up, and again, it's a bit stark for us, is that the cost of managing human impact. So if you're able to build business models around managing waste, managing pollution, which is also critical for our survival, but also it's a great economic opportunity for people who are able to crack it. And India is always going to be a huge demand center for these kind of opportunities. So there are new opportunities from this entire pandemic that are emerging. But the second trend that is coming from COVID is that there is a very, very strong theme of diversification. They're not investing in India for investment's sake. They are very clear that the supply chains have been weakened or have been weak, and COVID has exposed that. So they want to bolster it, and they want to reorganize in such a way that any future lockdown or any future impact doesn't cripple these supply chains as it did earlier this year. I think the prime example for this is Apple iPhone 12. Apple iPhone is always launched in every September of every year. It's a crucial date for them because it comes right before Thanksgiving and the Christmas holidays. They missed it this year. So which means that they had to ship out iPhones without chargers. I don't know if you saw that, but there was a huge analysis around that. Now, they don't want to repeat the same mistake again, which is why they've come to India in a major way. They've made India as one of the major manufacturing centers for iPhone. Seeing that a lot of other people have now started ramping up their manufacturing capabilities in India or outside of their traditional manufacturing centers. The last element that I want to put on the table, and then I'll conclude, is that COVID has shown us very clearly that governments and corporates can work very well, extremely well together, given we have very clear objectives in front of us. What has been happening in the past is that we've not been able to communicate our objectives to each other, and we've been working at cross purposes at sometimes, and it has not really yielded any results. But during COVID, we were very, very quickly able to establish a very short feedback loop on every time there was a new set of guidelines that were coming out. Companies would reach out to us and say, this part is not working for us, this part is not working for us, and it would go in back into the system, and another set of guidelines or corrections or erratas will start coming out. So the point is that once this mechanism was established, companies saw that, yes, government is willing to listen to us very well, and they are taking our feedback on board, and we know now how to talk to them. So as a result, what we have seen as a flurry of these production-linked incentives where departments are working very intensively with corporates to develop these finely tuned incentive schemes, which will encourage the right kind of people to come into the country and set up their manufacturing entities and then create that ecosystem around them. So at the end of it, I would just like to say there are, I think these 5-6 trends of points that I've outlined will sort of influence a policy going forward. And it's very, I mean, I think COVID is one important, although it's become a very cliched thing to talk about, but it is still remaining, it still remains one of the most important things that we have to take into account when you're building policy or building strategy. Thank you.
Thank you. Thank you, Vivek. Thank you, Sudha. Thank you, Vivek. You presented a very compelling case of how Invest India as an arm of the government has been pushing investors into investing in India and trying to keep them comfortable. I have some questions about that, but we'll take the questions later. Let's go to Madan, who is a person whose views I value immensely. Madan.
Yeah, thanks a lot, Bhaskar. And see, first of all, let me start off by saying that, see, I work in a credit rating agency. And very often we have this debate about whether India's sovereign rating is a fair one or not. We always seem to be a BBB minus on the verge of slipping into sub-investment category. And we actually turn around and tell people that, look, we feel that the international rating agencies could be having some kind of bias against emerging economies, and that's why India doesn't fare well. And finally, at the end of it, the proof is, what do foreign investors think about India? If I have a lot of FDI of around $65–70 billion coming in, if I have FPI coming in of around $30–40 billion at the best of times, quite clearly they don't think that India is a sub-investment country. We are a very advanced nation. It's very profitable as far as business is concerned. I think the proof that we have been seeing a lot of FDI coming into India itself shows the faith which has been reposed by foreign investors. Now, I remember when I started my career in the late 1980s, I don't think we had too much of recorded information on FDI. We used to get something from the CMI, which is to bring out physical volumes. And I remember we used to see numbers in 3-digit numbers for most of the years. It's only from 2000 onwards that we actually do get the government information even today. So most of the calculations on the numbers which are provided by the government of India are from 2000 onwards. And the picture which we're getting is that there have been different phases in which FDI has been increasing. There was a time when we had around $10–20 billion coming on an annual basis. Then we had something in the region of $30–40 billion, which we thought was a new high. And today we have seen post 2014-15, when the Indian government came to power, we have come to this region of around $60–70 billion. So obviously we have made a lot of progress out here. And I think as Indians, we should be proud of the fact that foreigners are looking to invest in India. But as economists, we always have these riders which we carry out. So we mentioned, so the first thing is that we should remember that this has also been a period where there has been surplus liquidity in the international market. So all these quantitative easing programs of US, UK, the ECB, and now what has all this meant? When there's lots of liquidity in the system, there's lots of money which is floating around. And it was this particular phase where the world economy or the developed economies were not really doing that well. Growth rates were much lower than what we saw in the emerging markets. So one of the unintended consequences was that all this money which was being provided by the central banks internationally were the ones which were getting invested in the emerging markets. So a lot of it came as FDI, a lot of it came as FPI. So India was not the only beneficiary. There were lots of countries which benefited, and we probably got our fair share of this investment. But this also means that we need to pause and think about, are we doing the right things to make sure that this flow of FDI continues? Because at some point of time, there could be a withdrawal of this QE, which means international funds may not be available in abundance. So in terms of supply of funding may not be that large. And the second part is that we have seen that a number of developed economies are also trying to rebuild the economies. So if you look at US, you look at the US elections, there's a lot of talk of saying that, look, the infrastructure is in a very bad condition. There needs to be more investment input both by the government and the private sector. We have similar kind of stories being told in Europe. What does this all mean? That the funds which are going to flow from the west to the east, if I call east being the emerging markets, there could be a kind of a slowdown, because we're also seeing that investors may say that, look, let's continue to put the money in the developed economies itself, and let's not look too much into emerging economies. So this really means that we need to introspect and ask a question about, are we doing the right things when it comes to FDI? We've gotten a lot so much, but can I really make the 70 move towards $100 billion on an annual basis? And are there any problems which I have along the way? Now, a curious thing is that if you look at where does this FDI go, look at the pattern which is provided by the DIPP, you see that most of it goes into non-controversial sectors. Okay, you go into banking and finance, you go into IT, you go into the FMCG, you go to the automobile sector. But normally, if you look at it, the FDI keeps out of any kind of sectors where there could be controversies. You're looking in terms of natural resources, keep away from it, because you never know when the laws change and what could backfire on an investor. Second is, we have seen at the recent controversy we had in the telecom sector. Now, I really don't understand what the issue was, but at some point of time, after 10 years, if you're told that, look, there are certain calculations are this way, the courts have ruled in a certain way, and you have to make certain kind of payments, which we thought we didn't have to make, it creates a lot of uncertainty. So I think what is important is when we are trying to look at foreign investors coming in India, what we really want to look at is certainty in business. I think business are willing to take risks if things are not too favorable. Like India was never a great country when it came to doing business. Our rank was very much lower, but even at that point of time, we got $40–50 billion. So one is that we show that we make it easy for you to do business. But I think if I know it's a difficult place to do business, I'll still do business because there is a market, there is opportunity, there's a lacunae in infrastructure, lacunae in various sectors. So therefore, I have an opportunity given the growing market which is there. But I don't want to have an uncertainty saying that today I come to put my money and tomorrow I'm told that everything that I've done is probably not right. I'll have to pay for something. There are areas, my international counterpart out there, or the company which is investing out here has to bear the cost. So nobody really wants to get into this kind of a situation. So I think a clear environment is really required in terms of regulation. So I think that is something which we'll have to work on. So I don't have any recommendations as such. I just know that, look, this is something which creates uncertainty, and the government has to be cognizant of that. And given the fact that we have a federal structure, we also need to make sure that the center and the states are on the same page, because we have a case of saying that the center loves you to do something, the states you cannot do it, state says you cannot do, you need an environment clearance. Now, let's have a very easy environment for an investor, especially given the fact that we require the investment, because that guy can go to any other country. We require that investment to come to India. He has options. So let's try and make sure that there is certainty in terms of doing business. There's, of course, a lot of work which is going on in the ease of doing business. I think our rank has been improving. There are lots of parameters which have shown improvement. And I'm sure that's a work in progress, because there are certain limitations to this ease of doing business index, which we see based on just a couple of cities. If I'm not mistaken, we're just looking at Mumbai and Delhi. Mumbai and Delhi is not full India. So evidently the same storyline has to be carried forward across all the states, so that anybody who coming to India does feel that they have a certain business environment and they can operate in a peaceful manner. Now, in terms of the numbers, I think, while $70 billion is very high, can we actually think of foreign direct investment being, let's say, the centerpiece of this entire story of building up our investment? Now, let's look at India. We are all talking of a $5 trillion economy. I think that mark has been pushed forward. I think the goalpost is being pushed forward by a couple of years. But let's ignore that part and say that if I have a $5 trillion economy, I'm talking of around $375 billion. Okay, so 375 lakh crore rupees of GDP is what I'm trying to look at. Okay, a 5 trillion economy is going to be 375 lakh crores. So out of 375 lakh crores, around 30% should be my overall investment on an annual basis. So I'm talking about something like 110 lakh crores of investment is required on an annual basis. And today, if I'm looking at even $100 billion coming in through FDI, that would come to at an exchange rate of, say, in 80, I'm talking of something like 8 lakh crores. So 8 lakh crores may seem to be a very small proportion of my 110, 115 lakh crores, which I'm talking of, around 7%. So while it is definitely an important part, I think India will have to concentrate a lot on getting more of domestic investment. And that's going to be the main driver of this 5 trillion target being achieved. FDI, of course, is always going to be a kind of a supplement. And personally, I feel that given the way that things are changing in the world, supplies of funds are going to dry up at some point. I won't say dry up. It won't be as easy flowing as what it was earlier. Opportunities are going to be there in other competing nations, especially if you look at the BRICS nations. Even if I keep China out, there's a lot of things being done by other countries to improve their ease of doing business environment. Everybody's looking for this set of money which is coming in. So I think there'll have to be a lot of policy initiatives which have to be taken by the government. As I told you, I've just mentioned certain kind of problems which are there for certain industries, but we have to provide a very certain business environment so that people feel comfortable coming and investing in India. And we would like to see this kind of investment spread across all the sectors and not just the ones which I mentioned about services, IT, finance, maybe FMCG, pharmaceuticals, where there are less problems, because I think we do require investment in other sectors. I think I'll end out there. Thank you.
Thank you very much, Madan. All the three panelists have one thing in common. They all agree that India needs investments, large investments. As I mentioned, if you look at the Asia Development Bank figures, in $5 trillion of investment just in infrastructure by 2030. If you're talking industry, it'll be a large amount more. Now, we had about 9 countries so far where we've had interactions with them on what do they see, what are the plans about investing in India. And everyone, at least more than 70% already had investments in India. The general theme was the past was excellent. We made lots of money here. At the moment, we're a little uncomfortable. And the future is a little uncertain because we are not certain about the government's policy, which is what Madan referred to. I'll just give you one simple case in mind as an example. 15 years ago, the government brought in a mining policy allowing gold to be mined because the estimates are 100 tons of gold can be mined in India. We've never gone beyond 2.5 tons in the last 15 years. And now it's shrunk even to about 1 point something tons. They've got the licenses. 20 years they've been waiting. One bureaucrat after another brings in a hurdle and they put in the money. They're still waiting. Now, you don't ask an investor to come in. The promise is there. The potential is there. India can be a great place, but then put in the money, you get stuck. So the uncertainty is one. Dispute resolution is terrible in India. We need to do something about that. And the third area that they've all talked about is, while tax rates have come down, the tax compliance issues are painful. And some of the very silly things I had to do my KYC for my company. I went to the bank, they gave me 20 forms to be filled in. All the numbers are there in the ROC. They had to only put in the company UID. Everything would have become automatically the printout. But no, we have not changed our processes. Now, these are 3 areas. How do you think India can address these 3? Uncertainty, dispute resolution, and what do you call it? Compliance for taxes.
Okay.
To everyone.
Shall I give it a go first?
Yes, Sonny. Yes, okay. Yes, Vivek.
So, okay, on the uncertainty bit, I've heard this complaint several times during my tenure at Invest India. And I always say there are 2 factors about India that one must take into account when you're investing in India. One is India is a democracy. And
yes,
there is a certain value to investing in democracy, but there is also a cost of investing in a democracy. And it is not a unique cost to India. I think any democratic nation across the world, from Australia to UK to US, will always have these examples where there have been controversial or disputed investments or laws that have been retrospective or retrograde or whatever it has been. Because ultimately the government is answerable to the people. There are many opinions and views, and it is an artifact of a vibrant democracy that you need to have consensus, and consensus is difficult to achieve in a country like India's. So this is, I don't want to say the word cost of doing business in India, but definitely this is something you have to take into account.
Okay.
Having said that, if you look at if you compare India in 5-year increments or decade upon decade, the direction has been unequivocal towards the forward. It has always been opening up or towards opening up of the economy. If you compare India as of 2020 versus 2015 or 2010 and vice versa, you will always see that any investor would definitely would want to be in the India of the later years rather than the earlier years. So definitely there is an improvement that's happening. So we must take a long-term view. And if you look at the greater success stories of foreign investors in India, they've always come back to us saying that, look, it has to be a long-term view. You can't be concerned about the short-term hurdles or the short-term blips. If you're concerned about that, then probably India is not the right place to be. Okay. On the second bit, which you're talking about on dispute resolution, I would say in some ways, even the government has the same complaint, because the government can't seem to enforce their orders because the courts seem to have a different opinion in a lot of cases. Now, again, for an investor, I would spin it in this way, that you should take solace from the fact there's a highly functioning system where if you don't agree with the terms of an agreement, there is an institution or there's an institutional arrangement where you can go and challenge these these conditions of a contract and get what you're supposed to be getting as a rightful citizen or rightful operator in the country. Even the government cannot impose or enforce their will because it deems it right, which some other governments across the world are doing. So but you can't have one without the other. You can't have a completely cut and dry certain system and very plain black and white dispute resolution mechanism without a free operation of your business. So I think it's a trade-off. I think people are realizing it. I do understand that India traditionally has not done a great job of opening up and talking about their views, and there have been some very good large marquee cases in the tax segment specifically on this. But I do believe that the government has done what it's supposed to be doing. There is no wrongdoing or mishandling of the situation. The third aspect on tax, again, I mean, we have inherited a messy system. There is a federal system, there is a state level system, and there is obviously an intent to make it more simpler for us to govern it. I think one important fact from the whole GST story, is that for the first time probably in the history of mankind has a government given up its sovereign right to tax. The state governments,
everyone was appreciative of GST.
Yes. No, the state governments have said that, look, we are okay with us not having the taxation powers and reposing that in the GST Council. Now, that's something that's very forward-looking, to get 29 states or 30 states to actually come around the table and say that, look, this is something that is good for the country. This will bring in more investments as a long-term investment objective, was something that was very far-reaching. And again, I go back to the system. In a system like India, where we have had a lot of gaps, we are continuously progressing. But the common refrain is always look towards what you've come from and where you are today. And if you're not happy, then we can have a conversation. But it's always uniformly positive.
Okay, great. Yeah. Anyone else? Sudha, Madan, your views?
See, actually, what you have said, Bhaskar, is exactly the factor as to why I think this number of $70 billion is not going to go up that easily, because the cost of doing business in India is high. Now, we may have explanations for it of saying that, look, this is a democracy and therefore there are going to be these problems. But the very fact that, as I mentioned, that most of the FDI gets concentrated in certain sectors, and to add to this, we can say that they tend to get concentrated in certain states in India. The states which are more progressive are the ones which are attracting more of this investment. So I think it actually serves the individual states as well as the center, and we have to address these issues. And I think what Vivek said is right. The government is trying, but there are certain limitations on it. But until we're able to practice, I think these numbers are not going to balloon up to any great extent. I think we'll remain in this particular range. If we're really looking to make this $17 to $150 billion, maybe in 5 years' time, which is going to be a dramatic increase, I think significant changes have to be done. See, we're trying our best. Let's look at it. Slightly not related here. Look at the IBC. We went 2 steps forward. Somebody is
Yes.
putting 1 step back. Somebody goes to court, and you get another view coming. So we have the RBI itself, which had to go back on this particular thing, because again, I'm not passing any value judgment whether it's right or wrong, but because it's a democracy, you have the courts. Even what a regulator says may not necessarily always go. I think this is going to be a challenge for us all the time, but I think it's work in progress.
Okay. Anyone else? Sudha, would you like to say something?
Yeah, I just want to add a couple of points, excellent points, Madan and Vivek. See, some of the things that you had mentioned were, Vivek mentioned we are a lot better today than we were a few years ago. So every passing day, we are getting better. So our ease of doing business ranking was, 3 digits 4 years ago, 5 years ago. We are at, I think, 143, in 2014 or 2015. Today, we stand at 63. So when you're comparing it with the rest of the most developed first world nations, Japan is around 30. Our closest competitor, our like very strong competitor, Vietnam, stands at 70 or 73 today. So if I'm not right. So this is all a result of several reforms and initiatives that are being made every single day. Agreed, it's not going to be easy. We are not going to pitch as we are the number one ease of doing business today, but quite honestly, from what we can see from the inside perspective, the government of India's goal is to become number one, and that number one is not going to happen tomorrow or 2 years from now. But every single day, there is a certain level of commitment the government is having, and all the departments and all of them are working towards that. But since it is a very large family, it has to happen in chunks, and it is going to happen slowly as well. Last year, if you notice, some of the companies, the Indian subsidiaries recorded a higher profit than the global parent company. That has been the trend last 1 or 2 years. So while it is not completely easy and simple to do business in India, but it makes a lot of business sense to set up the unit and make a start in India. And that's what the trend has been moving towards. And this year, quite even despite COVID, the trend is becoming a little more stronger, because of the one single reason: the companies realize they have to diversify their risk. So it is working in our sort of favor as well. The government has sort of identified that, and they're trying to grab that opportunity and make it, to the best of their ability, better and easy for the investors to come and stay here for good.
Excellent. In fact, Sudha, thank you for mentioning that some subsidiaries are making more profits in India than the global parent. Maruti Suzuki is a classic example.
Yes.
Honda Scooters believes that this will be the biggest profit center in India, in the world. That granted, these are large companies. They know, they've got the legal departments. They know how to maneuver the cogs in a large government machinery. Okay, and of course they've got access to the higher levels of power. Now there are two options for smaller companies, which eventually will make bulk of investments possible. 100,000 small companies will eventually be larger than 10 big companies coming in. And although India's history, whether it's Adani's or it's Reliance, has always tended to focus and protect the large ones, globally, it's a small and middle sector which has to be promoted. Now, one way is like a friend of mine, Joseph Chally, who's the partner and CEO of a company called CAMS Consulting, says you need small handholders to take the small companies and bring them to India and sort out the problems. You need small companies to take care of things, simple things like labor. The government passed a labor law. In several states, they've said local reservation for local people. So again, merit goes out the window, reservation comes in through one door or the other. Now, this is politics, but it makes my working expensive, especially for a small company. Your views. And then I've got one more question before I take on. Vanita, just one more question after this. Okay.
So Bhaskar, if I understand you correctly, you're saying that smaller companies in India will have a more challenging time operating in India as compared
smaller
to
investors, yes.
Okay. I mean, yes, I guess that is true in a sense, because I mean, you do need a lot of management bandwidth to operate in India. And which is why we do advise our clients that you must start localizing your talent as soon as possible. Expatriates do have a limited view on how to operate in India. And we do want local talent to we do recommend that local talent be absorbed at the higher levels as soon as possible. And that's like, there's a good correlation between success stories and that in India. As regards to, what you said, I think that has been taken into account. I think even the government does understand that there is a huge compliance burden on MSMEs as compared to the amount of time that they have. So one of the targets is to reduce the amount of time that the management or the single promoter would spend on compliance or paperwork or taxation or whatever that case be on a monthly basis to the minimum. So we are trying to, especially let's say for the labor front, we are trying to combine all of these regulations. The important thing is government is listening. Okay, we are trying to. It's something that has been a work in progress. Labor especially has been one of the very difficult areas of law for us to act on. So point taken, we are working on it, and hopefully we are able to show a better platform next year as compared to this year.
Excellent. Anyone else?
Yeah, one thing, on the same lines. So we are not just aiming to be the representatives of the government to the investors. Equal importance we place on being the voice of the companies and investors to the government.
Okay.
We take we identify the issues on a very periodic basis. We make a representation to show them what's on the ground. All of us go on field visits and site visits to actually see what is happening in all of the companies. There is an example of one company, that I have personally visited. It employs about 30,000 people from the rural areas, one single company. And that company has in India less than 10 people from their nationality. Rest of the 29,990 people are Indian. So they have localized it to that extent, and today they are talking about opening their 6th plant. So localization is the key. We are encouraging that. We are trying to bring together, even for domestic investors, not MSME, even the foreign FDI investors. We are looking at trying to bring the small players together and bring them in clusters. That's what is the true value add we are giving to technology, to adding resources on both ends as well.
Okay, I had one more question, but I postponed that. Let me take the audience question because I know I'm.
Bhaskar, just one comment.
Sorry, my apologies.
Yeah, no problem. Yeah, just one comment. I think I'll agree with you out there. And practically speaking, we should realize that most of your investors who are going to come to India will be the big ones. The small ones are going to face even greater challenges. So while there may be fringe operators in India, but it's going to be the big ones who are going to be adding to these numbers.
Yes, and the big ones have their own methods. Look at a fight at present, which is nobody wants to talk about it, but the fight between Amazon and Reliance and Future Retail. Amazon went to Singapore, which a small company might not be able to do. Now, big companies have huge resources at their command. And I can see that when the big guns come and the small ones are a little scared, you will not be able to. And today the Commerce Minister comes out with a statement that he wants to have exports of $1 trillion in the next 3 years, next 5 years, 2025. You can't do it unless you get investments of about $200 billion, $150, $200 billion each year. You need to create jobs, which in turn creates exports. So there's a challenge. Anyway, I'll come to the question later, but Avanita, can we take the questions from you?
So there are a lot of questions, but more than
we'll be able to take maybe 2 or 3, yes.
Yeah, I'll just select one best one out of the same. But sir, I would like to lay a ground here. It's very clearly mentioned that this time India is come to global recession very badly. So we see the construction, tourism, railways, airways, hotels, all doubt about it, and there's a loss in revenue as well.
Yes.
So how this investment will flow if companies think that there is a growing demand? How do we grow the spending capacity of middle class? The growing middle income population in India seems to be falling by the wayside. So how do we see making India a self-reliant India in this, and how we can take over the risk? How do we overcome all these challenges? Yeah.
Okay, open to you all. Vivek, would you like to try? Or Sudha?
No, go ahead, Madan. I think you wanted to say something.
If you look at what we are seeing today, I think we should realize that today's crisis is a man-made crisis. Okay, unlike the Lehman crisis where we could blame somebody, the financial sector, for creating problems, this is a man-made crisis, something which we refuse to accept, that we brought about this lockdown. We are the ones who have actually sort of destroyed value addition in the country. The only consolation is that India is not the only country, all countries have done it. So we have all done it to different extents. So that's the reason why we are suffering right now. So today, if we're talking in terms of why should anybody invest today, it doesn't make any sense for anybody to invest in India. Okay, because if you look at the overall capacity utilization rate in India is very much lower. We normally talk of 78 to 80% being the normal. So with the exception of maybe the steel industry today, most of them are operating at less than 70%, less than 60%. So therefore, I don't think there's going to be any fresh investment coming in. And unless I invest, we won't be able to grow. We will not be able to create jobs. We will not be able to create this consumption that we're talking about. So everything lies in creating employment. And that's not going to happen in the current financial year. It may not happen in the next financial year. And practically speaking, we'll have to wait for 2 years before we'll be able to be back on track. But even in terms of investment, foreign investment, to my mind, a number of $60–70 billion we're talking of will remain fairly constant because the rest of the world, rest of the investing world is also going through a similar kind of trauma as we are.
Excellent. Sunny? Sorry, Vivek.
No, I mean, honestly, this is a question that's way above my pay grade. How do we improve the income of the middle classes? I think Madan has hit the nail on the head. I think the most obvious solution is to look at ways of creating more and more employment, which in turn leads to attracting more and more investment, or helping companies, invest. Or the other way is, essentially do a direct benefit transfer to the people and let them spend us, let us spend our way out of it. I think we're trying both in a way. I don't know what will work or which will work, but I do feel this quarter's numbers have given us a little bit more hope or a little bit more positivity. We were expecting much worse. I guess there's nothing more to do except really work harder and ensure that we are able to do everything that we can.
Great. Sudha?
Yes, I agreed with almost everything Mr. Madan said, but for just one single point he mentioned, I don't see any investments coming in from a first-hand point of view. I can certainly tell you there is a little bit a window of opportunity that was presented to India, and India is working hard to make use of it really well. The opportunity is a lot of companies want to diversify and plug out from one large country because of the COVID, where all their supply chain and everything were reliant on one single country. Now people are plugging out. So when they are plugging out, there is a small window of opportunity that India has very beautifully identified. We are trying our best to get all that. So we are talking, like Vivek said, the Apple 12. So so how we do is, like, when these large guys come here, the large guys commission the smaller contract manufacturers, commission the supply chain players. So we have to go behind them. It is a hard work and the gestation period is going too long. So we really have to go behind them and entice them to commission their supply chain to come here. So that's one way of creating, a job and to create more spending power, more liquidity into the economy. So that is one way of, trying to do this. Other than that, there is certainly hope that we are seeing almost every day. Like when all world was coming to a standstill, Invest India was working for, a normal day is about 10 to 12 hours, but during the lockdown period, all of us worked like 16 plus hours on an everyday basis for a period of time, trying to help the domestic investors and the foreign investors, trying to talk to each of the investors who were lost, who wanted to get out, who wanted to diversify from wherever they were. We spent time talking to them. But like I said, and like you also rightly pointed, the gestation period is certainly long. It's going to take a year to 18 months. We don't know, but let's hope for it to be shorter and shorter.
Thank you. Thank you very much. I like the optimism. Yes. But anyway, Vanita, can we have the next question?
I think they said it all, but then there's one meticulous observation. When you see the effectiveness or the effective demand drastically falling, so why do you only wish for foreign investment, which is one-sided approach? Don't you feel that this will help the foreigners to extract more returns in lieu of FDI?
Okay. Over to you all.
I think that different motivations. Sorry,
please go ahead, Madan.
No, go ahead.
Okay. No, I think that's a very narrow lens of how we are seeing FDI. FDI is not a zero-sum game in India, especially. And it's not just dollars that they're bringing in. So there's obviously best practices, there's technology, there's also the ecosystem that they're helping to build. So there is a huge multiplier effect that FDI is bringing into the country. But however, point taken, it should not be just foreign investment. It is investment as a whole. Domestic investment also counts, and we are also working in it. In a sense, we are not making policy only for foreign investors. We are also making policy for investment and domestic companies as a whole.
Touche.
I think Vivek has answered this question. We should just remember at a time when domestic investment is not taking off, the government is not in a position to go through with its capex plans. Private sector is not bringing in investment. I think getting FDI, which has been at an all-time high in the first 6 months of this year, of I think close to $39 to $40 billion, I think that's been a big benefit for us. So that's the way we should be looking at it. It's a very good supplement.
Sudha?
No, I think Madan and Vivek have covered it well.
Okay, I just like to mention a small point here, and that is domestic investment, which should have taken place. Much of the domestic capital is running out of India. For me, that's worrisome. Okay, we need to make sure that the domestic investors also have confidence in India and not just the foreign investors. Point one. Point two, and this is something I don't know whether Invest India can persuade the government. You don't make a country strong without focusing on education. Let's take medical education. Last 4 years, we've seen the paucity of doctors, we've seen the crisis that is taking place in COVID, yet medical seats have not been increased. All you've got to do is tell the government hospitals to increase the seats 20 times more, because about 20 times more the patients outside. Opportunity is there. Bangladesh teaches 500 Indian students. They build capacity. Because of short-term plans, when you scuttle education, every chief minister was busy trying to cancel examinations instead of improving the system of evaluation in spite of COVID. We dumb down education. And that affects future employment, that affects future skill development. And this is something the government has not taken into account. And I thought maybe I could mention this as a point. If you have anyone's got any reactions to this point that raised, I'll be glad to.
No, Bhaskar, I think this is a very critical point. You are right. It's not just future generations. I mean, from a very narrow lens of FDI, we do talk about Indian talent being one of the best across the world. And you're right. If you don't water this sapling right now, we will never have the forest later on. So, point taken. And I think if there is anything that we can do to supplement the new education policy that has come out, happy to hear and take those comments to the relevant people. But just your point on domestic investment, I think it's also important to understand why domestic investors are going out. Because I have a sense from the analysis that we have done, a lot of investment is large corporates expanding in local markets outside. So it is inevitable that they would have to expand. I would take it as a positive sign that there are some of the big guys who are looking at markets that are outside of India, and they are sort of strengthening their base. But if it is India versus outside of the country, then yes, then it's a matter of concern. But I feel it's India and outside rather than India or outside.
Okay, brilliant.
Bhaskar, I think it's a slightly different situation today, because I remember when we had those whole series of scams, the coal scam, telecom scam, so on and so forth. No, at that particular point of time, lots of these corporates said, look, we don't want to be in India, we're going out of India. But today, I think the situation is different. I think it's more a case of diversification, and they're also seeing opportunities. They're looking at their own expansion plans. So I would look at this kind of outward FDI as positive compared to what it was maybe 10 years back, where it was a negative factor. I think lots of our top industrialists have actually made these statements saying that I'm going to England, I'm going to US, but I don't want to do anything in India because of all these problems.
Okay.
Also, some companies go out to learn the technology and and come back as well.
Yes, brilliant. Absolutely. Okay. I don't think we'll be able to take any more questions. I'm guilty. Okay. But Vanita, could we close the session with your words?
Kavya?
Okay, Kavya is one of our bright students. She's going to give the give the closing remarks.
Good afternoon, everyone. On behalf of the Department of Mass Media of SIES College Science West, I, Kavya Pillai, would like to extend my gratitude to the panel of Financing India. Today's topic being how to galvanize investments into India. Held by the Free Press Journal in collaboration with the Department of Mass Media of SIES College Science West. I would like to thank the panel for today, that is Ms. Sai Sudha Chandrasekaran, AVP at Invest India, Mr. Vivek Sonny Abraham, Vice President of Invest India, and Mr. Madan, welcome again, who's an economist at Care Ratings, and the moderator, the consulting editor at the Free Press Journal, and my professor, Bhaskar. I also extend my thanks to the entire audience for having encouraged us and supported us. Stay with us so far. We have just one more session to go, and we will be concluding what started off as one of the most interesting and really intriguing part, with financing India being such a two key words, our country and finances, and talking about so much. I think this entire broad umbrella has been covered in so many sessions. There's so much more that we can be speaking about. So please, the entire audience, I request you stay tuned for one more session. Again, I'd like to thank the backend team for having worked so hard that has built through all the work that has been presented today, and my department for giving me this opportunity. Lastly, would like to thank everyone present here again for sharing their knowledge of a new world and a new India. Thank you.
Thank you, Kavya. Thank you, Vanita. Thank you, our panelists. Without you, this would not have been possible.
True.
Thank you, Bhaskar. Thank you, Dr. Vanita.
Thank you, Sudha ma'am. Thank you, Vivek sir. Thank you, Madan sir.
Thanks. Are we still online, or we're just together?
I'm just switching off online. I'm just switching off.
Really had very good questions.